Hello and welcome to Trade of the Week. I'm Zinati Guma. Today, Loyiso Mpeta from Unum Capital takes us on an educational journey looking at the fractural nature of markets and the ending diagonal before delving into some technical analysis on MTN, Nike and Nutrien. Thank you so much for your time, Loyiso. Pretty interesting one today as we start off with some educational theories. Let's actually start off with the theory of fractals. What does that idea encompass?
So, the whole thing with fractals actually is not even unique to technical analysis or Elliott wave principle. It's a natural phenomena. So when you look at nature, and in terms of financial markets, the first person to really identify this fractal structure was Ralph Nelson Elliott, who devised the Elliott wave principle. And then about three decades or so later, a scientist by the name of Mandelbrot also then expanded on the concept of fractals. So when we talk of fractals, we talk of an organism or anything in nature that is made up of smaller variants of the same entity, but with the same sort of geotechnical structure or patterns. So what you have is a small pattern making up a larger entity of the same thing, but the pattern is pretty much self-similar. And then the bigger organism or structure also sort of looks like the building blocks that make it. So you have all these geometric patterns which are self-similar, but in varying sizes. So a classic example of that is if you take a look at this leaf, you've got this branch, and then the bigger leaf is this entire structure here. But when you look at the leaflets which make up this leaf, they all have the same shape, same structure, but different sizes. Likewise, when you look at this leaflet, it's made up of even smaller leaflets. But if you look at this leaflet, it's pretty much the same structure as this bigger one. And so that's what you have. You have these self-similar structures which make up the bigger structure. But the shape is pretty much the same.
Okay, thank you for that picture, because sometimes I need pictures.
Yeah, so this is where the whole concept of fractals comes from. So when we apply this now to the wave principle, which is what Ralph Nelson Elliott discovered, was the way markets advance. They advance in these patterns where markets will make an advance in 5 waves and then they will correct in 3 waves. Which we always refer to in terms of 5 waves up, 3 waves down, 5 waves up, and so forth. So when we look at the 5 waves up, we first have the first wave, which is typically small, which is then followed by a 3-wave correction. And then we have a further advance for wave 3, which is a similar structure, 5 waves as wave 1, but larger in terms of price travel. And then we have wave 4, which is self-similar to wave 2, and then likewise we then have wave 5, which also unfolds in a self-similar structure as wave 1 and wave 3. Now, for example, typically if you look at this third wave of wave 3. So this wave 1, wave 2, wave 3, wave 4, wave 5, because they have the same labeling in black, we say they are of the same degree, even though the size is different. And the smaller ones in red are of 1 less a degree. So this is the big leaf and these are the leaflets. But if you look at wave 3 of wave 3, if you were to zoom in, you will also find that it breaks down into 5 waves as well. So that is what fractal is. So it just repeats these patterns, repeat to smaller and smaller and smaller degrees, and therefore getting more minute details. So once you complete that 5 waves, you then have a 3-wave correction, which is a larger structure but self-similar to these ones we saw in wave 4 and wave 2. So we have wave A and then a pullback for wave B. And what I'm depicting here now is an ending diagonal for wave C. Now an ending diagonal is different to the 5-wave advance which we see here, which is an impulse. And the main difference is in an ending diagonal, the 4th wave always terminates within the price range of wave 1, And also when you look and when you draw a trend line connecting the lows of wave 1 and wave 3 and the peaks of wave 2 and wave 4, you typically get this wedging pattern. So in classic technical analysis, an ending diagonal is known as a falling wedge. Now, here's the interesting thing with an ending diagonal. It can either be all of wave C in a bear trend, or it can be the fifth wave of a 5-wave impulse if wave C is an impulse. So remember that rule, very important.
So does it signal an end of a trend?
Exactly. That's why it's called an ending diagonal.
Okay.
It signals the end of a trend and then the resumption or beginning of the
opposite
new bull market. So being able to identify this pattern can give a trader or an investor that sort of conviction that the downtrend is coming to an end, and then you can start to position yourself for a reversal and potentially get in early, and that's where you can get more alpha from the turnaround. So this is pretty much the fractal aspect as applied to the wave principle.
Okay, interesting. Is this the theme that we are following today with these stocks that you've chosen to talk about?
Yeah, so that's the theme, because again, the thing with fractals is the belief as technical analysts, or the belief that we have, is markets ultimately are driven by investor psychology.
Yeah.
Markets are driven, or the buy and sell supply demand is driven by investor psychology, irrespective of what the fundamentals say, irrespective of what your own independent analysis says. At the end of the day, what drives markets ultimately? It's investor psychology, and that is what determines whether an investor wants to buy or sell. So that is the whole fundamental aspect of it. And because we are now talking about human psychology, we are talking about human nature.
Yes.
And therefore, again, going back to fractals being part of nature, human nature then also produces its own fractals, which we then see in the markets.
All right. Well, let us drill into MTN, because there seems to be screams coming from all over the show that we should all be buying MTN at this point. What's happening there?
Yeah, so interesting. The last time we looked at MTN was back in April last year. And you remember last year I emphasized the fact that if a bottom is not in at 77 Rand 53, we are closer to a bottom than we are to say much more downside.
Okay.
And when I looked at this pattern, I said this is a clear 5-wave decline for wave A, and then we had this sideways correction, which I tentatively labeled as a triangle for wave B. And then I had this impulse count. And then I said, if the MTN breaks below 77.53, I will only make a minor adjustment to the triangle, and then I will look at this decline as unfolding as an ending diagonal.
All right.
So as time went, 77.53 was invalidated, but what I see now is a bottom seems to be in at 70 Rand 43, so not too far off from that 77 region. So when I look at this sideways correction now, all I did was make the adjustment of moving this wave E from here to here. And therefore, what we have now is a 5-wave decline, which is an ending diagonal. So we can see wave 1, wave 2, wave 3, wave 4 terminates within the price territory of wave 1. And then we have this further sell-off for wave 5 of wave C. And then what we've seen from this August bottom has been a strong advance for wave 1, a choppy correction for wave 2. So I'm seeing this as sort of the earlier stages of a potentially powerful wave 3. And when you look at MTN at current prices, it's still quite way off from its previous all-time highs. So I believe that there's still massive upside potential in MTN. So to try and time this one might be difficult, because wave 3 tends to be very powerful with very strong momentum, and therefore any correction you get might be very, very short-lived. So buying the dips might be tricky. So again, depending on your strategy, you want to buy and hold, or you want to buy any sort of dip, but the forecast, at least in the short to medium term, is a very bullish one for MTN.
Yeah, it's really, really interesting how the fortunes of MTN seem to be changing in the market's eyes. Of course, looking at the tariff increase that was granted for them in Nigeria. Although it's going to be quite interesting to see how they navigate that environment because of the still weak Naira. But we will be hearing from them when they do release their results. Loyiso, let's go into Nike. Because they've also had quite a rocky year.
Yeah. So Nike, first time we look at Nike, and again, just to put everything into context, I want us to go back to when Nike was listed back in 1981. We can see how strong this 2-3 decade bull market was for Nike. And we can see that Nike has been very resilient because the biggest correction over this last 30-odd year period was just this crash in March 2020, which was driven by the COVID-19 sell-off.
Yes.
So this correction, which is about 60%, this bear market, 60% of the all-time high, is very significant in the historical context of Nike. So this shows us that this is a very strong bear market and pretty much correcting this entire 3-decade advance. So it is quite a serious correction in context. But again, just looking at it from an Elliott wave perspective, what am I seeing? Again, I'm seeing the exact model which I alluded to in the educational segment, which is we have a very strong impulsive wave A, a correction for wave B, and again, we have a 5 wave of 5 swings downwards here. 1, 2, 3, 4, 5, and we can see this fourth or this bounce terminates within the price territory of this wave here. So immediately when I see this price pattern, it tells me it's an ending diagonal. So again, ending diagonal making up all of wave C. Now the question is a bottom in yet? I think it's still a bit early. What will give me more conviction that a bottom is in is seeing price break above this wave 4 peak, which is at around $90. But from a technical perspective, and also if you were to do momentum studies, maybe using a RSI or MACD, there's a high probability that you will find convergence between price and the MACD indicator, which shows that the selling momentum is starting to weaken significantly. And what investors and traders should be looking for in Nike is more buying opportunities as opposed to looking for selling or shorting opportunities. So even in Nike, I'm seeing early signs of a potentially massive turnaround.
Yeah, it's quite interesting because that chart really just, I guess it really goes in parallel with the fundamentals, because you look at the fundamentals of Nike, they've always been in place, quite positive, and then obviously until the COVID crash. But then also that is when the strategic troubles started. So it's quite interesting to see a little bit of a structural change there, but hopefully they are able to turn that around. It seems that things are starting to move, but a lot of the articles that I've been reading saying that turnaround is going to take quite some time. They do have a new CEO, and hopefully now they will start tapping into those wholesalers that they let go of after COVID.
But again, just on that note, remember again, our underlying philosophy is that price precedes fundamentals. So price can turn around before the fundamentals actually start to show.
Okay.
Which is where, again, the investor psychology aspect comes in. Because if most traders are looking at patterns or looking at momentum and they're saying, hey, there's a chance to go in early here, this stock could rally long before fundamentals actually show any signs of improvement.
Because of investor psychology. All right. Well, let's go into crop nutrients. Nutrien. This is one that I haven't spoken about with anybody. What is happening there? Talk to me about Nutrien.
Yeah. So a very interesting stock listed back in 2018, bottomed in March 2020, and then had a strong rally to all-time highs at 117. And we can see this correction has been very, very strong, over 60% down. And again, when you look at it from a structural perspective, you can say that this correction is part of the bigger structure. So what we have here is a higher degree wave 1 and a pullback for wave 2. But again, from a wave perspective, what I'm seeing is a sell-off for wave a pullback for wave B. But in this case, we don't have the ending diagonal being all of wave C. So what we have is wave 1, 2, 3, 4 of an impulse. And then what I'm seeing is this fifth wave, which completes then wave C, is an ending diagonal. So we can see here we have a smaller version of an ending diagonal, but again having the same implication that a bottom is most likely in at $43.70. And what's encouraging with this one is, likewise, like I said with Nike, I get more conviction when I see price breaking above the previous ending diagonal wave 4 peak. So we have that here. So I can say that in Nutrien, it does look like a bottom is in at 43.70. So this then becomes our line in the sand. And this is where then buying the dip becomes a strategy for a reversal. So again, looking at it from a purely technical perspective, strong signs that a bottom is in. Looks like a complete ABC, and the fifth wave unfolding as an ending diagonal typically is followed by a very strong advance like we saw with MTN. So this one is definitely one to keep an eye out on.
Ah, nice. I will definitely be looking out for those, particularly those ending diagonals. Thank you so much for your time, really giving us insights on the fractural nature of markets. I really, really appreciate it, Loyiso. That was Unum Capital's Loyiso Mpeta. And that's where I leave things with you, but do stay tuned for lots more coming up right here on Business Day TV.